Thanks, Arthur. And thank you everyone for coming along this morning. I think the most interesting part, hopefully, of today's sessions is going to be to get some insight into the industry, levels of activity and opportunities in the region across Central Asia and Russia. We've got attendees from companies that have interests in a number of jurisdictions across that region. So please do use this as an opportunity to ask them questions. I have some questions for today's panellists which I'm planning to put to them, but please don't feel that you shouldn't do the same. So I'll perhaps start with a couple, and then if you have any questions of your own, please do shout. The session today that we're going to start with is going to be looking at funding of projects in Russia and Central Asia, specifically from a financing perspective in the current commodity and geopolitical cycle that we're in. If I can start the panel by asking them of the current trends that they're seeing in the market for funding projects in the region, types of financings that they are seeing taking place, and the trends that they're seeing now that perhaps they weren't seeing 2 or 3 years ago. Could I start first of all with Jeremy Raffle?
Okay. Can you hear? First of all, it's very strange for me to be sitting at this end of the lecture theatre. Usually I've been a recipient and I must be getting old, so it's a bit scary. So my background is that I'm a mining engineer. I've been involved in this sector for 25 years on the financing side and have financed projects on a truly global basis over that time, including some projects in Russia and the CIS. So as a whole, we are seeing, just talking to Ian earlier, that the market is certainly not getting any easier. The market is in fact changing quite rapidly because whereas I've seen several down cycles before in my life, this is by far and away the worst. And we are seeing a lot of the junior companies who are struggling, obviously making a lot of noise and wondering when the party's going to start again. Unfortunately, I don't think the party is going to start again anytime soon. And a lot of people who've only been in this sector for a short time are hoping it is, and the music's going to start and the lights are going to come back on again. Unfortunately, I don't think that's going to be the case. So the trends that we are seeing is away from your typical institutional investor. Your typical institutional investor seeing redemptions at the moment, money coming out of their funds. They're having to sell even the companies they like, and therefore mining projects are increasingly reliant on alternative structures such as royalties, private equity, streaming transactions to actually finance their requirements. And I think that is set to stay. We're also seeing the private equity funds who've raised a lot of money, and some of it's real, some of it's not real, I don't think, who we all expected to step in. We've seen very, very little evidence of that yet. It may be that they start stepping up fairly soon, but there's certainly a shift away from your traditional institutional investor who's happy to put money up towards alternative structures.
Thanks, Jeremy. Alex Methrall from VTB. Alex, what's your view? Is it similar?
No, I'd say very similar. I mean, there's been a big appetite, probably still is quite a big appetite on the debt funding side. But debt funding, by definition, is pushing itself towards some of the companies that are already in demonstrable levels of production. And so, for a lot of the development assets, the greenfield assets, there is, as Jeremy said, a real dearth of interest, both on the, let's call it, the quoted institutional side as well as in the project developers. Having said that, the alternative sources of funding, the plethora in the last 4 or 5 years of, let's call it, quasi-family office or nascent hedge fund stroke private equity groups, have actually stepped into the fore quite demonstrably in that field. But that's massively limited the numbers of smaller companies that are ultimately making its way through that pipeline. So it's there, but it's much more technical, but for the region, still popular.
Okay. And again, for the region, perhaps John and Paulina, if you can talk about your perspective in terms of IPO opportunities, any transactions that have happened already, and the potential pipeline.
Okay, well, I represent the Singapore Exchange, so it's a little bit far removed from Russia, but we're seeing a lot of interest and questions coming back from the junior miners. But equally, they have to be associated with Asia. So if companies are coming through to us, and we are very much open for business, so far we've had 3 junior miners coming to the exchange and listing. Arguably, they're all coming from sort of Indonesia side, Australia. So the Russian side is really not very well developed yet. But in terms of turnover, velocity, based on the companies that are trading now on the exchange, we started from a very low base. We have about 25 junior miners and oil and gas explorers trading on Singapore Exchange at the moment. They are, in terms of velocity trading in the past year, we're about 2.5 times Toronto, Australia, and about 1.5 times of London. So clearly there is interest there. There is demand for stock and demand for junior miners, and we as an exchange providing that capacity to fundraise.
Well, I think certainly they're challenging times. I think the easiest way to answer your question is to describe some of the conversations that we've had with miners out in the region. We're still marketing, obviously. We're going to places like Kazakhstan. We're going to Mongolia, where we have an agreement with the Mongolian Stock Exchange. So clearly, we're getting put in front of these companies, and they're coming to us. Clearly, what they're looking for, at least at the outset, is actually introductions to alternative forms of finance, private equity, looking for that. They've read the articles and they've seen the hundreds of millions of dollars that have been raised, and are wondering where they can get some. But the other theme is they're also looking at other options. For example, strategics in China. Increasingly, that's pretty much every meeting that I have. There is a China element of some sort, either in offtake agreements or in potential financing in terms from the banks. So that's something that we need to fold into our strategy, is to look at who's getting the financing, who's still in play, and who can we talk to, let's say, in 1 or 2 years' time. But I agree, at least in terms of the near term, the listing topic is not what we're talking about. However, they know that the exchange, at the end of the day, whether it's Singapore or London, at the end of the day, is the ultimate goal. It's the place where you can have the best platform for future fundraisings. And most other times, it still gives you plenty of opportunities for further capital. Even that you're seeing right now constrained for existing listers, especially the juniors. It's becoming increasingly difficult, and so it's only the larger companies are the ones that have done roll-ups and that have become larger that are now seeing the opportunities. That said, once things do get better, the pipeline does look good. I mean, Mongolia is just chock full. It is. Someone called it Mongolia. It is. I walk in, talk to one company, and they run through 10 of their licenses, and they're all like number 2 or 3 in the region, or if not the world, in terms of the reserves. So one of these days, the stars are going to align. You're going to have the intermediate financing come in. That's the biggest problem. You go and talk to these companies, not just Mongolia but Kazakhstan. They're stumped on the initial sort of exploration stage in terms of getting that initial money to prove out that last resource. They actually have, in some cases, buyers lined up that are waiting for that $15 million piece of work to be done. But it's getting that $15 million that's the issue.
Okay. So John touched a little bit there on China, and obviously the demand from China has been a big part of the activity across the industry over the last few years. Perhaps if I can ask Alex and Jeremy on their perspective in terms of China's current level of demand and interest in the region, so across Central Asia and Russia, from the projects that they're involved in.
I mean, we still remain very positive on the whole China angle. I think we have, from a sort of commodity balance basis, given that we're looking at prices which have fallen across a large number of our sort of chosen preferred commodities, 40-45%, you're getting this, as Jeremy says, sort of inflection point in the sort of downward cycle at the moment, which is very significantly exacerbated in the market. Where I think mining is different and potentially sometimes where it doesn't fit with the sort of current institutional climate is that everything you're doing is on a 10 to 40 year basis. And telecoms where you don't want to plan more than 5 years ahead because it's all changed already is just is not the case in this world. And I think what has been clear is that the, let's call it, cultural similarity of talking to the Chinese, talking to the sort of wider Asian investors. They look over the same time horizon as one does in planning projects for the mines. So whilst I would say that there is, inevitably some suspicion at the moment around some of the commodities, and that they may not all be dipping into your latest iron ore project, across the sort of PGM space, copper, there is, some of the sort of slightly more specialty metals. There is a lot of interest, and so. What is interesting is that starts, I think, in a Chinese sense, at the sort of traditional SOE Beijing-based corporations, which inevitably lend themselves to some of the larger projects. But the diversity in China, particularly as one goes to some of the regions who are looking to expand their own footprints, their own, let's call it, vertical integration, still remains very strong. I think the only complexity from our perspective is, inevitably there is a slightly longer time frame in terms of having those conversations to get transactions done. There is still probably a dark space at that very early stage, pre-feasibility type funding, which is probably something that they're not so good at, and still is back into what I call the sort of specialist investors. But it does come with the complexity of wanting, to be fully involved, to have a choice on some of the EPC contracting, on being able to bring that into Asia. And so it changes the dynamic of just making an investment based on the qualities of the mine information to a sort of more rounded business one, where ultimately, increasingly, they also want control.
Yeah, I think that I totally agree with that. I think one of the key changes we've seen is that with the clampdown on corruption in China, you've seen a lot of decision makers, particularly in the SOEs or anything related to the SOEs, who are much more reluctant to make a decision quickly, and therefore a project would have been quickly signed off is certainly not anymore. And that's filtered right down, so you're getting Chinese taking a lot longer to make a decision on a project. That said, I think there's a lot of Chinese interest, particularly over in the far east of Russia, in Russian projects. Russia has some of the best coking coal in the world, that's undeniable. Also some great gold projects. The Chinese are extremely active looking for gold projects around the world, particularly in places where some others wouldn't want to go. At the moment, looking in South Africa, that's confounding everybody at the moment. Nobody really expects anyone to look in South Africa right now. The Chinese are very focused on trying to get projects there. So I think that you will see that increasing level of interest from China in those type of projects. Iron ore, I think, as Alex just said, the Chinese mentality is a lot longer thinking than the West. So they're thinking strategically over the next 30 years. They'll still be looking in Africa to see if there's anything that makes sense. They don't like being held hostage by the likes of Rio Tinto, BHP, and now Fortescue, Brazil. They are looking for long life quality, low cost assets.
I'd probably add, just in the juxtaposition, because inevitably Africa's been such a core focus for the last 5 or 6 years, is that potentially some of the investments, some of the projects that the big Chinese groups have looked at doing in Africa, have turned slightly in the last 18 months. That's probably also slightly less welcome in a lot of jurisdictions, and not wanting to push it too strongly, but the sort of rapprochement that there is Central Asia, China at the moment being the natural market for it as well, makes a huge amount of sense. And so where they were less experienced 2 or 3 years ago coming into the region, and probably still are not as experienced as they are in Africa, that dynamic is changing fast.
And I just want to add one other thing. I think that the real interesting country, if there's one at the moment, is Kazakhstan, given that Kazakhstan has made very good efforts to make sure that they are not seen in any way as potentially the next Ukraine, and that they are opening their markets very strongly towards Western investors, trying to make overtures to people. I think when you look at the difficulties of doing business in Africa, for example, look what's going on in Zambia right now. Can't actually believe that they're allowing that to happen. investors, I think, will start to turn towards Kazakhstan to see, where there's opportunities, given that they've got some very good gold deposits, very good chrome, iron ore, coal, uranium. So I think that's the one country that stands out.
Okay. Stephen, obviously, Stephen's one of our partners, and one of his specialist areas is advising on regulatory and sanctions type issues. Sanctions-related issues have obviously been quite significantly on people's radar, who've been looking at investments in Russia. But what we were hoping Stephen might just be able to touch on are what the sanctions requirements currently are, because I think there's a bit of uncertainty around that, and rather than us just focusing on them as being challenges, the ways in which people can consider and address those types of issues.
Yes, of course. I mean, I think, as many people will no doubt be aware, it's probably one of the driest subjects that you'll ever come across, sanctions and sanctions risk. And before perhaps I pick up on the question, I think what was quite interesting listening to...
Can you speak up, please?
Of course.
I can't hear you.
Sorry, yes. I should have this microphone maybe a little bit nearer to me. Just to pick up on some of the things that people have said, what I thought was... if you're looking at the calls I'm getting at the moment, so who rings me up on sanctions queries? I get a lot of calls from private equity, and I get a lot of calls from very, very worried people in banks saying, we're very worried about the financing arrangements of the latest round of sanctions, particularly from July onwards. I'll come to that. So if I was looking for the prevailing feeling, you were talking about the sort of the how the market is, from a legal perspective, it would seem to me that there is a significant degree of nervousness and a degree of an increase in awareness of risk. Whereas 5 years ago, probably before the Arab Spring, I think issues around sanctions, despite US enforcement, were not very high on people's agenda. I think that now has increased very significantly on the back of, in particular, very robust US enforcement, with OFAC being at the forefront of the sanctions and trade sanctions enforcement. And just a small point on US sanctions, they have a very different perspective in terms of actual criminalising of breaches of sanctions. They have a strict liability approach. So if you breach and they find out, or you self-report, then you're very likely to face action, whereas EU sanctions and those imposed by the Swiss regulators or the Australians tend not to be quite so rigorous. And a further point on that is, I think there is sometimes a generalised view, there's sanctions and it's all pretty much the same. Every jurisdiction is actually different. EU have their sanctions but are enforced differently in each jurisdiction. The US obviously have their sanctions through OFAC. The Swiss have theirs, the Norwegians I was looking at the other day have theirs, Australians have theirs. So if you want to stay on the right side of the law when it comes to sanctions, and this is very difficult, it is to have that awareness of where are you operating, who you're operating with, and trying to match those 2 points to the kind of the sanctions regime that you will be facing. One other point, picking up what people were saying around China, which I think is obviously a very interesting area, not so much on the sanctions side, but much more on the anti-corruption side. Absolutely agree with you in terms of the anti-corruption drive from the latest, from the new, he's not new anymore, but from the new president. I mean, I was talking to a metals analyst the other day, and he was saying, if you're looking at 2005, 2006, you would have these umbrella SOEs, but underneath it, you would often have effectively, certainly functionally privatised agencies underneath. That is particularly in analysis. That isn't happening so much anymore. You are having a much more, from my perspective, and people talking to me, have a much more rigorous approach, if you like, from the SOEs, and less of that sort of maybe more westernised, privatised sort of approach. So I think China is a very significant risk. Going back up to the Rio Tinto some years ago, but I think people are now very aware of the anti-corruption drive in China. I did come across a situation a little while ago where there was a talk going around the party, the senior party in China, and they were saying it's putting off investment. The anti-corruption drive is putting off investment. We're a bit concerned about it, and there was a shift. And I was talking to some other Chinese official, and he said, "Well, yeah, we have a new slogan, and it doesn't translate very well. But what we now say is, kill less often, kill carefully, on the basis that you could be killed, executed for corruption in China." And there was a slight shift, which I thought was not necessarily a comfort, but nevertheless. A couple of other points, really picking up on what Ian was saying. Some confusion. They're not that confusing in the end. On the financial sanctions side, you have you have your designated list, so you have individuals who are on that list. And in the OFAC side from the US, you have their specially designated nationals, their SDN list. And the list will have individuals and it will have corporations. And it will also have, so you have that list, you have a sector list as well in relation to restrictions, in particular on the Crimean exploration framework, if you like, around oil exploration. And you have financial restrictions as well on access to capital markets in particular. There's some new sanctions which came in at the end of last week that some people might have seen, but that all they do is actually add new individuals to the list. So it's not going away. And so to summarise, you have individuals, you have corporations on the list, and you have sector-specific sanctions as well, both in the EU and in the US and in other jurisdictions as well. They cover, from the EU perspective, they cover EU nationals, they'll cover EU corporations, and they cover business done in the EU as well. So pretty comprehensive, and from a UK perspective, breach of those sanctions is a criminal offence. And to some extent it depends on your risk appetite. There hasn't been a prosecution here, unlike in the US, but obviously most people in reputable companies are not thinking to themselves, well, no prosecutions, therefore we'll run the risk. Penalties are not significant in terms of, from a criminal law perspective. For corporations they are unlimited fines, but at the moment we really don't know what sort of level those fines might be. There are also reporting obligations, which I think are more honoured in the breach, around if you have information which might help in compliance with sanctions, you ought to be reporting that to the Treasury. HM Treasury here is the enforcement agency, which is sort of the equivalent of OFAC, the Office for Foreign Asset Control in the US. Apart from speaking to your lawyers, you will all have, all of you, but many of you will have lawyers. I think just to wind up, what I would say is when you are going into new projects, when you are drafting your new contracts, I think you do always now have to have one eye on the sanctions. You ought to be looking at your consolidated lists, which are all available on the websites. You ought to be looking at HM Treasury's FAQs, which are actually pretty good. And I think you have to have that awareness now, because otherwise the reputational risk of breach is obviously very significant. The potential criminal risk of breach, also very significant. I can obviously talk about this for a really long time if you want me to, but I think I'm going to stop now.
Okay. John?
Just an overlay on sanctions. I think those are very interesting comments. I think what it actually tells us is there's a lot of information on the current sanctions and how it applies to companies. And you can avail yourself of the advice of many law firms who can give you a very good explanation of the risks and the costs. So I think in our conversations with both corporates as well as advisors and investors out in our marketing, what's clear is that they're more or less comfortable with the advice that they're getting on sanctions today. What bothers them, keeps them up at night, is are they going to get worse? And so I think that's fundamentally the key concern and the key factor or variable when people are looking at when the capital markets are going to recover from this in Russia. So they're looking at the oil and gas agreement, the gas agreements with Ukraine. So that's going to be fundamental. So I think what was interesting, and came up in a lot of conversations, a lot of people agree that what they need is 6 months of relative stability where nothing changes. But no one can quite agree when that 6 months kicks off.
Yeah. I don't know. I mean, I wonder what the audience thinks. I mean, to me, I wonder whether we're sort of in that 6 months at the moment. Because there were quite significant sanctions at the end of July around access to the bond market from the five major state-owned banks in Russia. So that was the end of July. Since then, we have had some sanctions, some increase in sanctions, but there have been more around targeting new individuals. And I sort of wonder whether we may be in that period at the moment. But you're right. I mean, I get those phone calls saying, well, what's going to happen? And I'm saying, well, I'm a little, should I do this? And I'm thinking, well, I don't really know. What do you mean that it could be imposed tomorrow and the assets will be frozen like that? Isn't there a kind of a moratorium period? No, there isn't. It is a very frightening time in some perspective.
I think, just adding, let's say, the more positive side to sanctions. I mean, there's clearly been, a big impact on the financing. If I'm trying to remind myself of the sort of broad financing stats, take sort of the loan market as an indication. I think we're down lower than 100 billion this year against nearly 500 billion last year. So you're 75% down on the financing side. So if you like, there is a real change in the environment. I think the thing that I probably would say is that it's probably at the moment, of a greater worry to the universe of investors on the oil and gas side than it is to the universe of investors on the mining side. And so in terms of, both looking at the region split between Russia and non-Russia, but also looking much more at the mining side, there isn't really any impact on the mining financing. And I think, just to pick up the point, and although my stats talk against me, as there isn't anything on the mining side, the ability to be able to tap back into the mining funding is something that I think we're seeing coming back online. Certainly from the regional banks is certainly there. I think what we saw, going back to your 6-month sort of period of clarity, is that no one wanted to do anything because no one wanted to run the risk of breaching any of the sanctions. And so you've got an instantaneous sort of backtracking from a lot of the funding institutions, whether it was investors or banks, who just said, well, until I really understand where this is, I've seen what happened to BNP, I'm not running the risk of any of it. So you had an immediate withdrawal, and I think you've got people coming back again now saying, okay, well, maybe I can't do offshore Arctic with X national company because that is a clearly sanctioned entity, but helping Y project, which is going to be coking coal into Asia from East Siberia, that doesn't. And so I think it is. I think we don't want to.
Or it's done through non-EU entities.
Exactly.
Using non-EU banks
or using yuan.
Yeah, exactly. No, I agree with that.
Yeah, in terms of structuring opportunities, there are ways that to address those risks. I think is the key message there, that it's not all doom and gloom.
Yes.
Okay, I'm conscious we've got until about 11 o'clock for this session, and I know that you've probably got a number of questions yourself. So if we could perhaps start by taking a few questions from the audience as well. Who'd like to go first?
I really would like to go back to this Ukraine issue, because it seems to me that is casting a long shadow over investment from Russia. And therefore this is all about politics and not really about economics. What is going to happen and what is the outcome? I mean, I can imagine that a normal investor wouldn't touch Russia with a barge pole, the current state. But so, I'm surprised the panel did not focus a bit more on this issue, the sanctions issue, but it actually goes beyond that. It's just a general impression of whether it's safe to do business in Russia with what's going on in Ukraine, Crimea. I mean, that to me is fundamental to this whole thing, and I'd like a bit more focus on that from a very distinguished panel on exactly what does this mean for us now and going forward.
Okay, thanks, Jocelyn. Who'd like to start in response?
Well, why don't I take a go and then you can shoot me down? It's easier. I think if I went back to nuts and bolts, I think you're right completely that at the moment the institutional community have taken their foot off the accelerator, and it is not for a fund manager an easy decision to take a big investment position in a Russian entity, because you don't know tomorrow whether that investment decision is going to be 20% down on your performance stats. If I take it out of the institutional community and I say the corporates, certainly the investors that are coming, let's say, from an eastern hemisphere rather than the western hemisphere, the actual financial returns that are coming out of those projects are the same today as they were 18 months ago. And so looking at it from a sort of purely, has anything changed on the ground? Are they still getting the same number of tons or ounces out of their mines? Are they selling those for the prevailing commodity price? And is that still the same today as it was? The answer is yes, it very much is. Does that mean that you're beginning to get in the minds of the people who are invested regionally, whether that's Kazakhstan or Russia, them turning around and saying, maybe I'll go to Singapore and list, where I stand a chance of having a different institutional community, assuming my asset has got an Asian flavour to where it's going? Yes, you're getting that kind of a change around in debate, but outside of the very small thing of that prices have very materially changed over the last 12 months because of the politics, the underlying economics are the same.
I would have to agree. I think really, again, going back to just practical conversations that I've had with companies, and what's interesting is that there is business that is still getting done, but they are doing it within the frameworks, within the rules, and this is clearly slowing things down considerably. It's affecting the volume of financing that's available. But what is clear is that people do have backup plans in place and are affecting them. It's affecting different sectors in different ways. So clearly, retail and consumer was one of the strongest sectors coming last year. That's been hit very hard. Obviously, as a lot of these guys were importing products, and that's clearly seen immediately in their earnings before interest and tax. But these companies are finding a way. They are adjusting, and I think that's really a theme in terms of raising capital. If we're returning them to mining, clearly, even before the sanctions, we're in a very difficult and challenging market unless you pick out specific and cherry pick specific metals, whether it be zinc or copper or PGM. So yeah, it is affecting not just the sanctioned entities. There's an effect, of course, in terms of pricing. Obviously, investors are aware. They're cautious. They're going to use that when they talk about potential investments in companies, and that's really the key issue: is when are you going to find a price? When are companies going to find a price acceptable that they're willing to do? It's not that investors aren't looking right now and willing to invest at a certain price. Everyone's a bargain shopper. People are hovering and looking. The question is, when is it going to actually make sense for companies to take that money?
I think you also probably have to turn to history. So whether it was Zimbabwe, whether it's Iran or Burma, what's happening post-sanctions? So the assets are still there. And Myanmar is probably the best example, well, relative to Singapore. The flood of capital that is now going into that country is outstanding.
The question is how soon?
Absolutely. Well, you're looking at 20 years at least on that case, but...
We'll be dead.
But it's certainly, at least that's something to look at in terms of historical examples.
I think from an investor's point of view, talking about institutional investors in the UK and the US, with the backdrop of extremely challenging commodity markets and their performance being examined on a daily basis, there is nobody, and virtually nobody I know, who would invest in Russia right now. Let's put it bluntly. And I think, but that does not apply to places like Kazakhstan and other former Soviet Union republics. So I don't think it's all doom and gloom, but I do think that look at El Rosa, which is the arguably it's the second biggest diamond miner in the world. It's trading on a 5 times PE multiple, probably lower. And when you've got something like Dominion Diamonds trading on 15, 18 times, that tells you that people will still, if there's a listed vehicle which is good, people will still occasionally buy the shares, especially if they've already got them. But trying to get money for a new project or an exploration project, or trying to raise a new IPO, there's no way, in my view.
Yeah.
Hi, for me. I was interested in the comment about sanctions not having such an impact on mining, Alex, compared to oil and gas. I understand that. And then the comment about there's no money going into Russia, full stop. What is the situation with Russian producers looking for Western technologies that want to reach out and buy those technologies to improve? Could you comment perhaps on the accessibility of those technologies, or whether that opportunity is also shut off for them in terms of improving their operations?
Sort of two quick comments to that. I think if you divorce again the mining from the oil, where clearly there is a much more acute problem around some of the explicit sanctions in terms of the technology that's available to the let's call it Greenfield Siberia. The answer is I think there is no issue with regards to technology coming into the region. I would have said that this year included, but more and more, because one has to sort of see it in sort of 3-year chunks, because I think otherwise you don't perceive it. There is more and more Western technology, Western expertise in the region than ever before. I think, interestingly, just in terms of actually trying to get the minds of some of the regional owners or let's call it promoters of Russian assets, getting their heads around the fact that they need to take Western, non-Russian technology is much easier. So on that side, I think it's been quite good, and I think access has been more. And in fact, there's one project that we're looking at the moment where there's been and this is a complicated issue. There's 3 different sets of Western technology firms that have gone to try and give different views on it for different parts of the capital structure. So there, I think it's quite good. Where I think you've had a very much a slowing is that there were quite a lot. If one sort of takes Russia on its own over the last 5 or 6 years, there were quite a lot of, let's call it, large established businesses that were looking at doing more business in Russia, either because they wanted to team up on some of the big projects that the large established companies were trying to bring forwards, or because they were themselves saying, look, I'm going to do a small project, it may be smaller than my usual typical size project for a banner Western company, but I want to learn how to operate in the region, I want to get better expertise, I need that has definitely since sanctions have started stopped, because that whole sort of decision making process for let's say a commodity industry that is focused on trying to reduce capital expenditure, it's a very easy one to say, well, actually we were going to do that, but that's on hold. So I think bringing it in from partners, Western partners, has very much slowed.
Just one maybe slightly techie on that is I think sometimes you do have to look at dual use technology, and sometimes you may think you have your technology or expertise and it's mining. And I saw you heard you were very careful to say mining specific. If it's mining specific, that's fine, but you will have to have an eye on dual use technology and potential breaches of not necessarily sanctions but export control issues.
But it's also a reputational risk as well.
Absolutely. Yeah, there's always going to be. Yeah, exactly right.
Thank you.
Craig.
Hi, Craig Stillers from UK Trade and Investment. It was more of a statement rather than a question as such, but it was just confirmation that 3 weeks ago we were in Kazakhstan signing a joint agreement with the Kazakh government, with our Trade Minister Lord Livingston and their Prime Minister Masimov was at one of the meetings, but we signed the agreement with Ishikeshev. But as part of that trip, we've actually provided $1.75 billion letters of interest from UK Export Finance to be used in the mining sector for projects that are deemed appropriate. It's a letter of interest, that's not a line of credit yet, but the point is that we see Kazakhstan as a particular opportunity for the mining sector, and we're hoping to sort of continue that strong relationship we've built up over there, which includes at the moment providing a lot of insight and assistance on the proposed new mining code. We've got an agreement that we will allow to see the concept note for the mining code, and through a particular mining subgroup we'll provide comment to them on that. Also the USD through some positioning are providing some assistance now on what that mining code should do and say, and we're also hoping to actually launch the new mining code in London, hopefully. So that's what we're pushing for the moment. So I just thought I'd give you a broad indication that the UK government's looking closely at Kazakhstan.
Yeah, and that resonates with what you're saying, Jeremy.
Yeah, it does, absolutely.
Okay.
Sorry, Ian, may I have a follow-up to my question?
Yes, yeah.
A little bit of a comment. I think, actually, it's about taking a long view. Now, you can either take a long view that this is going to sort itself out. You can take a long view that it's going to actually get worse and things are going to collapse. Now, the lady from Singapore quite rightly pointed to other jurisdictions where there have been problems. I mean, on the face of it, it's quite interesting because Mr. Putin isn't messing about in Ukraine, but he's also saying Russia's open for business. And as an operator in Eastern Russia, I can tell you that they don't even know where Ukraine is. And as far as operating, we have no problems. In fact, if anything, it's easier. People are pleased to see us spending money, doing work, and what have you. So it's quite an interesting situation, because if you can take a long view, then, and you think that long view is that this is just, that what happened, the perestroika and everything, that Russia is not going to change course. This is a different issue that's been blown up, perhaps out of all proportion. And that the reality is that as an investment home, it is possible to operate there actually quite successfully. And there may be opportunities to expand one's business at a better price on better terms because of the current situation. I'm not saying that the long view, that, you know, I lose sleep at night as to whether the long view is positive or the long view is negative, but I have a feeling that it's positive, that this course that Russia set itself on is going to continue. Ukraine is, and there is a lot of, you can see with Mrs. Merkel and Mr. Putin sitting for 4 hours closeted in Brisbane, there are efforts to try to come to a resolution. It seems ridiculous that Russia can't be a country that can't be part of the family of nations and instead becomes a pariah. So I would actually argue that, perhaps, we're seeing an opportunity in Russia if you're brave, because you can operate quite successfully on the ground, because, as people have said, the sanctions don't cover that. I mean, it's high risk, so therefore the return has to be very good, but it's not off the page.
I think to answer that, I think you're absolutely. I actually do think you're right. Having spent a long time looking at Russia, looking at the mineral endowment and the opportunities there, if you take a long view, then I'm sure it will sort itself out. But your typical fund manager who's being measured on a daily or probably a monthly performance, he dare not, against the backdrop of commodity prices are falling around his ears, he dare not make a decision like that. The longer term guys and the private equity guys, I'm sure, will look in Russia and see good opportunities there.
Yeah. Alex, did you want to add anything?
Yeah, I mean, this I'd agree. I think there is a large, part of Russia which sees itself as a European culture, European community that is in the process of being misunderstood and shunned, and that misunderstanding is pretty fundamental at the moment. But I think the view is very much that there is a lot that they want to do economically. All these things goes in fits and starts. It's not a sort of smooth linear progression. But I think the understanding that they want to bring in investment and ultimately for economic generation reasons invest in a lot of these projects in Russia in particular, led by the resource space, underlies I think the belief or hope that this is something that will come to a sort of, let's say, more positive conclusion sooner rather than later.
I wonder, do we have anyone in the audience from a private equity background? I'd be quite interested to see if we do, and your particular perspective on appetite for that part of the world. No? Okay. So we've got a question in the back.
Yeah. If I can put a bit different question, if we're talking about the sanctions, do you expect that the successful... Yeah, thank you. So do you expect that the successful British businesses and investments take, for example, the Petropolis, in the current situation, will take the operations and assets from Russia, or do you expect them to stay?
I mean, Jeremy's probably best placed to respond to this. I think rather than picking individual stocks, but talking about the community of companies as a whole, there are stocks that have performed well despite the fact that sanctions have hit the market. So if I look at if you were to give me the London Exchange, you can look to a Polymetal or an Alrosa, who are both up more than 20% on the year, which is a good performance in a falling commodity market. I think that that what we've seen, or what has exacerbated the whole thing, which comes together with the sanctions, is that the commodity prices are pretty bad. If you look at the stats, I think you've had negative returns for mining funds every year for the last 4 years. I don't think you've had a proper mining IPO for a couple of years, at least in this jurisdiction. The big fundraisings that were done before that was, the Glencore deal, was the Rio rights issue, was the Anglo rights issue. And so you've had a dearth of good investment opportunities allied to, let's say in Petropavlov's case, a difficult operating environment for the last 18 months, which has seen you take big negative returns on your share prices. But if you go to the fundamental, at least I think part of your question is where you've got good European businesses, good British businesses operating in region. I think you've had for a developing region very few problems, and that is one of the reasons why. And it's not just from the UK, but you look at the Scandinavians, you look at the Germans in particular. Down to very, very small companies in Germany, in a comparative sense, are very materially invested in the region, and by and large, that's been a positive experience.
I think Alrosa is a very good example, Alex. The diamond story is still exceptionally good. It's one of the only commodities which is going to, forgive the pun, shine in this environment. And one of the best companies happens to be a Russian company. So people will still invest in Alrosa if they want to gain exposure to the diamond market. My point earlier was that it just trades on a massive discount to its international peer group. And I think, people will still reckon it's not so much Alrosa is an established business, it's trading on various exchanges, but that will still be recognised. It's more that a company trying to raise startup money or exploration money or anything else for a Russian project is very, very hard right now.
Thank you much.
I'm just wondering what the financing possibilities are for projects within Russia, Russian money or any Russian banks, how much can they support international investors who want to buy assets in Russia?
Alex, back to you.
I think if you were talking to my financing colleagues, they would say that they've had more volume through their business this year than any year in the last 5 years. That is potentially inevitably stimulated by the fact that there are less international banks who are out there doing the same thing. I don't want to just talk for my institution, but let's say broadly that sort of group of 5 or 6 big banks that there are regionally. I think the thing that they have done quite well in the last couple of years is take on a sort of, let's say, Western understanding about how the different financing structures will work, and have, if you like, a very, very large appetite for resource risk in the region. I think as banks, they're very comfortable with resources. It's one of the sort of 2 or 3 sectors that they see as a sort of core sector for them. And in the sense that because that is their realm, that is their ground zero, they don't perceive any additional risk going into those projects in the region. So in the last 3 or 4 years, where interestingly you find quite good marriages between the regional institutions and the international institutions, is coming together to say, do something in the capital markets here where you may have some kind of pre-IPO instrument, some IPO instrument that they do together, but where it's 85-15 or 80-20 on the balance sheet, heavy lifting is where that's worked. And so I would say at the moment, yes, the appetite is still there. Going forwards, the appetite is still there. where people are a little bit less gung ho is where it's debt into greenfield. But I think that's more the commodity market writ large rather than the region.
Okay, we've overrun slightly, so I think if we can wrap up there, we've got a coffee break now. The speakers are going to be around for a short while, so if you do have any questions you'd like to follow up with them, please come down here or please speak to them over the coffee break. And we'll see you back in about 15-20 minutes for the next session. Thank you.
Sorry.